In yesterday's video, we had talked about the products of Asian Paint, the strategy of Asian Paint, and a lot of facts, including some fun facts for Asian Paints. But is it a fundamentally good company? Is it a good time to buy this stock? To know more, check out the full video. Hi guys, CA Rachana Ranade here and I welcome you all to my second lecture, part 2 basically on Asian Paints. In today's video, we are going to talk about what are the external factors which might impact Asian Paints, how Asian Paints can really impact from the government policies, what is the fundamental performance or what is the financial performance basically of Asian Paints over the last 5 years, update about Q3 results of Asian Paints. All said and done, is this a right time to buy for Asian Paints? Because in this video, we are also going to talk about the technical analysis of Asian Paints. Let's come to the very first external factor which can impact Asian Paints. Let's understand what could be the basic raw material for a paint industry. It has to be crude oil. Question is, where do we import our crude oil from? I'm going to come to that, but I'm sure you might be aware that one of the largest producers is Iran. Okay. If Iran is one of the largest oil producers, crude oil producers, problem is that Iran and America, they are right now having some strenuous relationships. If they break out into a war, then what could happen? They might be producing a lot of crude oil, but that crude oil might never reach other countries of the world. Why? Because whenever a war situation starts, the supply chain itself is broken, right? If that be the scenario, what is happening? Let us understand. All over the world, demand is very high, but supply is broken. Basic economics, more demand, less supply, prices are going to rise. Let's understand what is India's position. As far as India is concerned, we used to import a lot of crude oil from Iran. But due to US sanctions right now, we have shifted majority of our imports from Iran to other countries. What is the problem here? Problem is that Iran used to sell crude oil to us at a comparatively lower price as compared to other countries. If I am forced, as India, if I am forced to buy crude oil from some other country, is my price, raw material price going to rise? Answer is yes. So understand, if raw material prices rise, the profit margins might shrink. The second point is pretty much linked again with the war scenario or the overall global uncertainty. What happens is that whenever there is any global tension going on, it could be the America-Iran war or it could be US-China trade war. If there are lots and lots of such factors, it could be Brexit as far as the European context is concerned. There is always a risk of foreign exchange fluctuations in this case, right? If I am importing crude oil from some other country, I have to pay this money in their currency, or it could be I have to make the payment in dollars. The moment rupee goes on going weaker and if dollar goes on going stronger, the amount of me which I have to pay to that country becomes more. Simple words I'll tell you. If rupee was $1 is equal to 60 rupees, let us say some X years ago, and now rupees $1 is equal to 70 rupees. Let's understand the simple example. If 100 rupees or $100 was the import bill for me, earlier I used to pay 100 into 60, that is only 6,000. Vis-a-vis today, that same $100 bill, I'll have to pay 100 into 70. So my outflow, which used to be 6,000, will now be 7,000 for the same $100 bill. So any foreign exchange fluctuation wherein dollar becomes stronger and rupee becomes weaker is going to be bad for any raw material importer who is going to import raw material from outside the country. The third impact is not about any trade war. It's about the war between us and nature. Now what happens is that if we are not complying with whatever are the natural requirements, we are polluting more, global warming, all that, it's going to lead to a lot of climatic changes. Pune having rains in December is something which I experienced, I guess, for the first time in my life. This year we saw a huge prolonged monsoon, and this did not happen only in India. The same problem was faced by Sri Lanka. The moment we have a prolonged monsoon, a sector which is hit badly is the construction sector. For paint industry, one of the key related sectors is the construction sector. So if construction sector is badly impacted by a prolonged monsoon, similarly, paint industry is also going to be negatively impacted by a prolonged monsoon. So the last point that I'm going to talk about external factors is the overall slowdown. This slowdown I'm going to break down into three parts. Number one is a is an overall global slowdown. In fact, in countries like Oman and Bahrain, there was a slowdown which started, or I can say which picked up in the last year and still continuing in this current year. If you remember in yesterday's video, I have talked about how Asian Paints is not located only in India, but it has offices or it has its locations all over the globe. So a slowdown in some other countries is also going to impact Asian Paints in a negative way. Is it only Oman and Bahrain which is having a slowdown? No. In fact, in our country also, I'm sure everyone might be knowing this as of now, India is facing a big problem as far as the GDP numbers are concerned. Our GDPs are almost at all-time lows. If this happens, paint industry is definitely going to suffer. Question is why? What is the relationship? It's very simple. These industries, like paint industries, are called as cyclical industries. Means what? Let us understand. If the overall economy is performing better, these industries perform better. If overall economy is down, these industries perform in a lower fashion. Why? If the overall economy is down right now, job security can be a problem. And in that case, I won't spend money on painting. I won't spend money on decorative paints. But if the overall economy is down and if my health is not doing good, I am going to spend on medicines. So pharma is a type of industry which is not related a lot with the economic performance. But yes, industries like paints will be definitely impacted if there is an overall global or overall country level slowdown. Okay, so one more negative factor for Asian Paints and the entire paint industry. Number 3, I'm sure everyone also knows about the automobile slowdown right now. You might be wondering, what is automobile slowdown? How is it related to Asian Paints? Obviously, Asian Paints would paint a lot of cars, right? If the overall demand for cars itself is less, the production for cars is going to go down. If the production for cars is going to go down, the demand for paint is going to go down. The demand for paint is going to go down. Asian Paints is going to get impacted. Why only Asian Paints? The entire paint industry is going to get impacted. So I've talked about all the factors, external factors, not only in India, but globally, what different factors can impact this entire paint industry and Asian Paints as well. Half of you might be wondering, it's the perfect time to quit this video because she has been talking continuously negative about Asian Paints. Why even am I watching this video? So before you take that decision, let me give you some good points about Asian Paints as to how our government policies can have a positive impact on Asian Paints. The very first policy which was launched in 2015 was, it's not the first policy as such, but I'm talking about the first policy, which was Pradhan Mantri Awas Yojana, which was launched in 2015, wherein the government intended to promote affordable houses. They had aimed at building 2 crore affordable houses over a period of 7 years. By the way, this was launched in 2015. We are in 2020 right now. 5 years almost down the line. And you know how targets are met, right? Target is set and the achievement pace is very low. And towards the end, it's going to be a boom, right? So if government is going to pull up their socks, if they are going to rush in for completion of their targets, at least if they are going to try to meet these targets, ideally in the last 2-3 years, that is still 2022, ideally we should see again a good positive boost in the housing sector. Again, understand, a boost in the housing sector, which is the basic ancillary industry for housing. Ancillary is, it is related to that, is nothing but paints. So a good boost for Awas Yojana is definitely going to positively impact the paint industry and Asian Paints in our case. The second one is smart cities. This was also one of the dream projects which was brought ahead by this government. They had targeted an expenditure of 98,000 crores. So more and more smart cities are going to be built up, more and more modernization is going to take place, more and more smart houses will be built up, more and more paints will be required, demand will be boosted. So these 2 government policies, I personally feel, is going to have a good positive impact on the company. Now comes the fundamental analysis part, wherein we are going to talk about the 5 years key parameter analysis. I'm not going to talk about each and every parameter, but some key snapshots of the 5-year analysis. The very first one you can see is revenue from operations. This is a standalone position that I'm talking about. I hope you understand by standalone and consolidated. Standalone is only Asian Paints. If you want, you can check even the consolidated level of Asian Paints. The revenue from operations from 2014-15 to 2018-19 has grown from 10,911 crores to 16,391 crores. So if you see a year-on-year growth, YOY is basically year-on-year growth. That is nothing but previous year as compared to current year. Okay. So as compared to 17-18, in 18-19, the growth was 15.8%. But if you check the overall CAGR, and now you are literate, financially literate, you know what is CAGR, okay? You have seen my previous video. If you have not, you have to watch this video on CAGR. When? After watching this video, okay? So this CAGR is about 10.9% as far as the 5-year growth rate is concerned. So it's a positive sign. CAGR is on an average, it was a 10% growth in revenue, but the immediate previous year growth as compared to the previous year, so CY versus PY, current year versus previous year, it's a 15.8% growth, above average as compared to CAGR. So let's go ahead with the next parameter, that is EBITDA, earning before interest, tax, depreciation and amortization. So if you check out from 14-15 to 18-19, the journey is good. The EBITDA has grown from 2,197 crores to 3,586 crores. The 5 years average EBITDA CAGR is at 13%, but YOY growth, just now I told you, current year as compared to previous year is 12.2%. Is it a bad sign? A little bit you can say, because the growth percentage has gone down. Does this mean that the growth has gone down? Does this mean that the EBITDA has gone down in absolute terms? No. It's the pace at which, it's the speed at which EBITDA is increasing, that speed has gone down a little bit. Because if you see, the previous year EBITDA was 3198 crores and this year's EBITDA is 3586 crores. So in absolute terms, it has grown, but the speed at which it has grown has reduced a little bit. Now that we talked about the profit and loss, let's talk about one or two parameters from the balance sheet. One very important ratio that is to be checked is the current ratio. How much liquidity are they having? It's checked as current assets is to current liabilities. So how much current assets they have and how much current liabilities are payable. Again, I've explained all these terms in my video on fundamental analysis. You can have a look at it. My website is rachanaranade.com. You can have a look at it afterwards. Okay, so checking out at total current assets. Total current assets right now are 7,634 crores vis-a-vis its total current liabilities are just 5,076 crores. So basically, in simple words, it's like within 1 year, they're expecting around 7,000 crores to be received, and within 1 year, they're expecting an outlay of roughly 5,000 crores. The moment your current assets are higher than your current liabilities, it's always a positive side as far as the financial analysis is concerned. One more very important thing that we check out is how has been the reserves growth. If you see, the reserves growth has been very nice if I'm comparing from 2015 to 2019. The reserves, which stood at 4,646 crores, is now at 9,423 crores. It's more than double growth in reserves, which shows that the profitability is continuously increasing. Let's talk about the Q3 results update of Asian Paints. On 22nd January, they came up with their Q3 results, and I found out an article on Economic Times, which I'm just showing it on the screen. It mentioned that Asian Paints came out on with its results on Wednesday, that is 22nd of January, wherein they reported a 20.2% rise in the consolidated profit, and now the profit stands at 764.43 crores as compared to 635.83 crores. But we are not going to rely directly. We are going to check whether these figures are true and correct or not. Now you are again learned investor, right? So now where am I taking you to? I'm taking you to the Q3 results, which are published by them. These are freely downloadable on their websites, okay? So this is how the Q3 result look like. Here you can see at the top, it's consolidated financial results for the quarter and 9 months ended 31st December 2019. What were the figures? The figures were profit at 764 crores as compared to 635 crores. I'm just going to scroll down. Profit figure is going to be completely towards the end. Here you can see final profit for the period attributable to the owners of the company. See these figures, 764.43 crores. This is for the current quarter, 764.43 crores, and versus 635.83 crores. This was for what? 635.83. So this is like 31st December 2018 quarter. Okay, if you want, you can just cross check this also. See, this is 31st December 2018 quarter. Okay, so has the profit increased? Yes. If you want to check how much percentage, it is 20.2%. If you want to cross check this, go ahead and cross check this on the calculator. I'm not going to do that. Okay, if you want to check the revenue, consolidated revenue, it rose 3%. Okay, from what to what? 5420 crores to from 5263 crores to 5420 crores. So revenue is not a big jump. Here you can see it's a 3% jump from 5263 to 5420 crores. Now one more interesting part, valuations. There are various methods through which we can value any company. In the initial videos, I started off giving analysis using only one valuation method, which was EV by EBITDA valuation method. In my previous video, I did two valuation methods, which was the second one which I added up was the revenue multiple model. In today's video, I have also added one more valuation model, which is the PE multiple valuation model. Me being a normal individual, rather than keeping very high targets, try to keep achievable targets. So I started with only one valuation model, and slowly and steadily I'm increasing the valuation models for your benefit. So I'm directly sharing the valuation which we all calculated. The value comes up to 1,972. This is the target price that we have calculated using TTM. TTM is the trailing 12 months. It's a little bit dicey concept. Let me know in the comment section if you want to know exactly what is TTM and how it impacts the valuation. Second one is revenue multiple model. The target price is coming to 1,950, and by PE multiple the target price is coming to 2,020. What I've done is I've given equal weightages for this because these are three methods, so basically 1/3, 1/3, 1/3. These are the weighted values, and then I try to calculate what is an overall weighted target price. Okay, so the overall weighted target price comes up to 1,961. Ideally, by this calculation, this target price can be achieved within a time span of 1 year, that is by December 2020. Okay, these are calculations that we are doing. There can be a plus 2% minus 2% deviation, so it could be 2,000 on the upper band and 1,922 on a lower band. Question is, if this is the expected target price, question is what is the current market price? Question number 2, is this the right time to buy? Okay, right now we talked about the expected value, that is 1,961. What is the current value? Currently it is trading at 1,786. Okay. Now, is this the right time to buy? I'm not going to go into MACD, RSI, Bollinger Bands, Fibonacci and all that. It's very difficult to explain all these in one single video. I have a separate series on technical analysis for that. But a very base analysis for this can be easily done just by looking at the chart. By the way, this is a one entire year chart which you can see on the screen. Feb 19 to almost Jan end 20. What am I trying to do is I'm trying to draw a trend line, which is like I'm trying to calculate resistance here for the stock. Okay. So here you can see the resistance is somewhere around at this level. So this is where the stock has tried to go up, has refused to go up, again went up, refused to go up further, came down. So how many times it has touched? 1, 2, 3, 4, 5 times. It went up to this level but was not able to cross this level. Next time there was a big correction after 3 tops. There was a big correction. Again it tried to climb up here, refused. And right now again in the recent past, so this is like the price level on 21st January, it tried to again climb up from there, refused, again has come down. The next question is, so if, by the way, this is called as the resistance level which Asian Paints is facing right now. I have also made a separate video which is there on YouTube on resistance level. Now let's try to find out which is the support level. By the way, this data which I'm trying to work on is just the last 3 months data, okay? So here you can see the support can be seen somewhere around at this price, okay? Roughly at this price, I can say. A big breakout from here, right? So if this be the support can be seen at around 1,696. So let's understand this. This acted as a resistance in the earlier days, crossed the resistance, it came down, bounced back again, it came down. See how beautifully it is honoring the support level. So what could be the possibility? If it is failing to go up here, it can come down to this level. And then if it goes above this level, then there's a great chance that it might zoom further. Which trend is this? This is known as a sideways trend. So currently I see that the stock is in the sideways trend. So it's not a very, okay, analysis, shall I tell right away? I'll tell that in the next section. So I know that it was a wait for only 2-3 seconds, but it's okay. Let me tell you what the analysis is. If a stock is in a range bound price level, then this type of stock can be good for swing traders. What they can do is sell somewhere around at this level, buy somewhere around at this level, okay? But if you want to become a long-term investor, you have to wait ideally till this stock either breaks out of the resistance, okay? If the stock breaks out from this resistance, then there's something known as an upflag pattern formation, which will be satisfied. Then you can see a big uptick in this stock. Or if it breaks down from this level, then it's a clear-cut avoid for this stock in that case. But currently, if it sees again a good support at this level, This type of formation is also called something like a triple bottom formation, where bottom 1, bottom 2, bottom 3 can be seen, and then again there are fair chances that the stock might go up. Okay, so technically I can say this is a wait and watch stock. If you still want to go ahead and invest, as far as the just looking at the fundamentals, you may start accumulating in small quantities. Please understand, I'm not a registered advisory person, because you have to get registered with SEBI to give a clear-cut advice. So what I'm allowed to do as per the SEBI norms is I can put forth my analysis. That is what I'm doing. You have to do your own research and then invest in any stock. Okay, I'm not liable for anything. I hope you have enjoyed this in-depth analysis of Asian Paints, wherein I have split my analysis in part 1 and part 2. We did talk about a lot of factors, right from global parameters to Indian scenario to the financials to technicals as well. What I'm planning to do is that whenever I'm launching the stock of the month analysis, which is available for the pro investor category, the pro investor category is going to get the first stock of the month analysis in the first half of February. And I'm trying my level best to give such an analysis which will be in go ahead and invest in this stock rather than wait and watch scenario. Okay, I'm going to add more and more sections to this analysis. So for example, right now, I did not discuss about the management analysis part, how the management is. I did not talk about their background, the corporate governance structure and all that. This is also going to be added in the fundamental analysis for the pro investor category. Do let me know in the comment section if you want me to include any other separate part in fundamental analysis as well. If you have not yet considered joining my memberships, do have a second thought on that as well. This is definitely going to add a lot of value in your knowledge, and I believe that I'm making a lot of efforts to put more and more value addition to your existing knowledge. I hope you'll appreciate this fact. That's it from my side. Jai Hind.